Good morning, real life traders. Good morning. Give me a quick one in the chat. Make sure you can hear me okay. Awesome. Good deal. Thank you. Happy Friday. Friday, end of the week. Got some playoff games coming up this weekend if you're into football. I want to welcome everyone here at Real Life Trading. All of you who are joining us live on YouTube right now. Hope you're having a great morning so far. Should be a quiet day in the market, I'm going to say. Just we are looking like we're going to open inside yesterday's price action. Typically, what does that represent? Some chop, lack of direction. We've got some. We're going to dive into the markets, the broader markets here in just a second. Let me just move some things around here real quick. Get the chat over here. Close this screen. All right, let's take a look at the broader markets. Let's start with the S&P. I'm going to back this out a little bit here. Let's go to a wider view. So we've talked about this in the past. I think all of the moderators have talked about this. I mean, you look at this trend line here, and that is some serious, strength in that trend line, producing a lot of weakness in the market. Just like back in here, this would have been a very strong trend line coming up through here, but now we're still holding it. But what's interesting, though, is I do want to point out here that the frequency that we are attacking this trend line is getting shorter, right? So if you look between here and here, and then from here and here, and now you look, and we are within a very short period of time, we are just hitting up against that trend line, pushing up against it, trying to get through. Yeah, Chuck, hello, nice to meet you. Nice to meet you too, Stephen King. Welcome. So Chuck, I assume you must be Chuck Jackson. You must be relatively new. Newbie. Awesome. Good deal. Well, this day's for you because I usually come on a couple times on Fridays during the month, and we slow things down a little bit. This is a morning, the first hour, where we're just going to dedicate to newer traders, newbies, as you put it. Just slow things down, walk through some things. And it's good to do this on Friday mornings. Again, Fridays are typically a slow day in the market, right? Generally, slow day. They are by far my least profitable day in terms of trading. So anyway, so good place for you to be on a Friday. Rock, good morning. Rock, I was just thinking about you a few minutes ago because I'm going to do another session later on today. I'm going to try to get a few more real life traders to join me on the mic. And I was just thinking about what a great conversation you and I had, along with when Jesse came on, and also Win Smitty. We had some great talk that a couple Fridays ago, right? So anyway, we're going to do that again later on today. So there's Win. Yes, sir. Awesome. Cool. All right. So this is interesting to me, how we are pushing up against it, and the time frame by which we attack this line is getting shorter. You can see we hit it here, we hit it here, we're up against it, got up against it again here. Now, what's important, in addition to attacking this trend line in a shorter time frame, is that we are making higher lows here, right? So back in here when we hit, we basically came down and we made a lower low, double bottomed here. Now we came up and we hit. Now, granted, this is a lower low than here, but still we're holding this level up here, which is key, that we held this level. We didn't make a lower low here, and now we're back up against this trend line. In terms of looking at the MACD here, okay. Let me zoom in a little bit. Okay, so here's the last 3 times that we've gone up against this line, and what I find interesting, if we go into, let me grab a trend line here. Matt R, yeah, so looking cup and handle-ish, right here, good call, right? So you had a high here, we came down, here's the cup, now here is the potential handle, right? So we got to break out of here. The handle can last 2 to 3 days or a little bit longer, but at this point, for this to work as a cup and handle, it would need to start breaking back out of here, and we need to get above this part of the cup. So yeah, good eye. But what I was going to point out here is, if you draw a trend line here on the MACD, and let's just draw it this way, right? We need at least 2 points here, right? We can draw this trend line on the MACD. As we've talked about in the past, and those of you who trade together with, a lot of the traders use the MACD or the RSI, but specifically, like, I always go back to Woodshed, right? Woodshed is the master at this. But what am I looking for here? Just throwing it out to the group, right? Again, we're slowing things down for the newer traders so we can help them understand what we're talking about. Exactly. Win, nailed it. Gold star for Friday. We're looking for divergence, right? So when we made this high and then this high, right? This double top here, we had a bearish divergence. Even though we were making a higher high here, we had a bearish divergence on the MACD, and you would have seen the same thing on an RSI. What is interesting to me, though, now granted, we didn't make a higher high here, but we are coming up into these levels, right? It's almost like a triple top here. But what I do notice here is that the RSI, the MACD here, is now above this trend line, right? So, and also, if you notice, we have, if you look at the histogram, right? So when we made this high here, look at we were under the histogram. We were under the 0 line on the for the histogram here. Now we're above, right? So positive signs, bullish signs. Now, does that mean we're just going to go screaming through this trend line? Not necessarily, but these are just things nuances that you want to pick up and notice. So let me remove this drawing. All right, so that's the S&P, right? And it looks like, so far today, we're looking like we're going to open as an inside candle. We do have some moving averages here providing support. So again, for me, inside days typically mean chop, lack of direction. So especially on Fridays, I tend to be very conservative with the trades that I take. I'm looking for those trades with the highest probability of wins. And at the end of the day, sometimes the best trade is no trade at all, right? So if I don't trade, I'm okay with that. And typically on Fridays, I try not to trade just because I know that this is my least profitable day. All right, let's take a look at, that's the ES. Let's take a look at the NASDAQ here. Zoom out a little bit. Right? Same thing. We're still looking at the same trend line. Now, granted, here we are shortening this time frame by which we are coming up against the trend line. Now, prior on the ES, we're up against it 3 times in recent times, but here we're up against twice. But still, if you look, we are shortening the amount of time that it takes to get up to that trend line and try to get through it. We're also, again, now this was more of a triple bottom here, right? So if you look at, whereas with the ES, we were making more of a higher low here, this is more of like a triple bottom. If you look through here, I'm trying to get my drawing tools. They should just drop down from the Anyway, you can see here, right here, I'll just do it this way. So there's that triple bottom, right? So we are holding, it's a good level of support. We're holding that. Again, we're back up into this trend line. We do have, if I zoom in here, right, again, just like the ES, so today we're looking at an inside day, meaning for those of you who are new and not sure what that means, price action right now is trading. Here's yesterday's candle, right? We're on the daily chart here. Today's price action is trading within yesterday's range of trading. So here's the low from yesterday. Here's the high. Price action right now is inside yesterday's price action. So again, planned for there to be lack of direction. You're looking at having some chop in the market. What we'll be doing is we'll be looking at specifically, well, we have our 10 EMA strategy tickers that we're going to take a look at, but then we're also going to be looking for tickers that are doing something very different than the market. And there are a handful of them that I was looking at pre-market here. In terms of, let me go to 3 month here. So in terms of also the divergence we were talking about, right? So if I go back up into here, MACD, and I draw this line, I'm going to connect it here, I'm going to touch it here, and we're going to come down. So very similar look as the S&P, where we have the MACD is now above this trend line drawn previously, where we came up here, we double topped. Again, but at the same time, we made a higher high here, but we had a bearish divergence. So if I draw this trend line now, the MACD action is above that trend line. And again, similar to S&P, where back in here, if you look back, especially on this high here, the histogram was below the zero line. And again, even though we have a lower high here compared to here, you notice the histogram is above the zero line. So we are seeing some potential bullish divergence now, and we're holding. We got to try to see if we can hold this level here and try to push through this trend line. I mean, ultimately, for the market to go back bullish, we've got to get through this strong trend line. All right. Just zoom in here a little bit. We don't have, obviously, so this is SPY on the daily. This is the Qs on the daily. So MACD, okay, if we look here, if I edit this, okay, it's using, so these are my settings. See if I can answer your question, Chuck. So here on the MACD, my fast length is 12. The slow length is 26. So these are exponential moving averages, right? So it's based on time. It's a exponential moving average. Let me see if there's any other information here I can give you. These are just the settings for the histogram. So MACD, yeah, so it's looking at momentum, right? So it's using these moving averages, right? Good morning, Kyle Bennett. Using the 12, 26, and the MACD length is the 9. So hopefully that helps. All right, let's look at the SPY here, right? So yesterday we had a gap down, right? So the day prior, so here's Thursday's candle, Wednesday's candle, right? Let's zoom in here. Yeah, Chuck. Yes. So certainly the high low can be different than the open close, of course, right? I'm not sure if I'm understanding the full question, but yes, the high and the low can be different than the open and the close. To be very honest with you, I'm not sure if it's considering if the MACD there's taking in the high low or the open close. I really don't really look at it other than I am looking for, when I'm looking at the MACD, I'm specifically looking for divergence. That's really all I'm using it for, right? So I keep it very simple. To me, MACD, RSI, I don't try to break it down into the nuts and bolts of how it works. I'm just looking at it for how can I use it to identify either a bullish divergence or a bearish divergence? So I try to keep it very simple in terms of how I use it, right? So I'm not going to use it to ultimately make trading decisions. I'm just using it to give me some type of a heads up as to what might be happening with price action, right? And with the market or general market or a specific ticker, doesn't matter. But that's how I use it. I specifically look for divergence using the MACD just to give me some type of a idea of direction, momentum. Is it momentum picking up? Is it slowing down? Okay. So hopefully that helps. Here, okay, so SPY and Qs, right? So Wednesday candle, we had a big bearish candle. Thursday, we had a gap down. Again, all of you who are longtime RLT members here, you know this answer, but for the new people, what type of gap are we looking at between yesterday's gap was bearish candle, day prior, gapping down. What do we got? Throw it in the chat. Bearish candle, gapping down. What time? There you go. Agnes, retest gap. Ron, retest gap. Yeah. So let me go back to Chuck and let me move up here. Sorry, the chat's moving pretty quick. Okay, so Chuck, Agnes got it. Okay, so in terms of the gaps, right? So if you have on this day, we had a bearish candle, right? So if the gap the next day is in the direction of the previous day, it's a retest gap. So you have a bearish candle gapping down, which is bearish. That's a retest gap, and specifically a bearish retest gap. If you had like back here in this example here, right? You had a bullish candle gapping up. Bullish candle, previous day, gapping up in the direction of the previous day, that would be a retest gap. So that's a bullish retest gap. Now, the difference, and we're going to look at some of these in a moment, is the difference between a retest gap and the gap and go. Okay, Johnny's saying, I'm having computer problems. I'm on a different computer for Zoom. Yeah, no worries, Johnny. Whatever you need. Yeah, so Chuck, yeah, and we'll Chuck, this is your time. Post as many questions as you want. So when the gap is going in the direction of the previous day, bearish, that would be retest gap. If it's going in the direction of the previous day, if the previous day was bullish, it's gapping up, that is also a retest gap. Difference is you have a bullish retest gap, you have a bearish retest gap. All right. All right, so we obviously SPY, because the market's not open, but SPY and the Qs are not posting. But that's why I look at the S&P and the NASDAQ, because I know, just based on what this is the current price action today with the futures, I know that we're going to be opening somewhere within yesterday's range. All right, let me pull up a different screen here. Let's continue, and I already have the screen open, so let's continue a quick discussion about these gaps for those of you who are new. Let me change the share. Okay, so you should all be looking at Netflix right now. Okay, so Netflix is currently gapping up. Okay, so Netflix had earnings come out right here. You can see if we hover over here, it's going to tell me that earnings were, I think it was yesterday after market close. Let's see. Yeah, earnings on the 19th after market, right? So what's interesting about, and a new CEO. Yeah, what's interesting about Netflix is, if you look here, the earnings estimate was 4 cents. The actual was 45 cents. The actual was 12 cents. So they didn't beat earnings, but it's gapping up, and it's gapping up because, yes, as Wynn pointed out, there's a new CEO, but also if you go through, you always want to check out the notes here, the news. And so what I saw somewhere here near subscriber numbers. So in the Q4, the subscribers numbers went up. I was reading, there looks like there's more news that has popped up since I was reading this earlier this morning. But so there are, so I think it was the subscriber numbers went up, and then their estimates, their forecasts for Q1 are better. Just trying to remember where I read that. Anyway, but it is interesting that you got, Netflix missed earnings, right? But still gapping up. But the key thing here is, and so Chuck, what we're looking at here is yesterday, right? Here's yesterday's price action. We had a bearish candle, right? So if I draw a line here on the high from yesterday, just eyeball that, right? Here's yesterday's price action. Here is the pre-market. So you can see we are currently gapping up above yesterday's price action. So you had a bearish candle yesterday with, look at this volume, right? So, and again, remember, earnings came out after the market closed, right? So it's not like people knew anything, well, I shouldn't say that, because of course there are people out there who know, but we had a lot of bearish volume and pretty decent bearish candle here, and now we're gapping above it. So the point of that, Chuck, and you others who are new, is you need to be asking yourself, how are those people feeling, right? How are those people feeling who got in short yesterday? Yeah, so Ron, you're right. It's a gap and go. So, so Chuck, this is a bullish gap and go. Okay, so we have a bearish candle, but it's gapping up. Exactly. They're not happy. They're very sad. They're losing money. Anybody who's short here is now going to be, waking up this morning going, oh no, I've got to get out, right? So it's a trapping candle. You are trapping all these bears that sold yesterday because we're gapping above that price action, right? There's Woodshed. Woodshed's jumping in now, pointing out NQ, keep an eye on the screen, trend line. So Woodshed, I don't know if you were with me earlier, but of course I was referencing you and talking to you, talking about you in terms of the MACD, RSI, divergence and all that. Again, I always give you credit for being the master of divergence. All right, so here, this is again gap and go, right? So we do have a gap and go on Netflix. Now, one thing I do want to just point out here is, let me pull this over, right? So Netflix, right? Netflix, we're up 7% right now. Is that 20%? No, but it's still a decent amount to be up. So just when you're looking at trading something like this, you want to be aware of what percent something is up or down, okay? So that if it's up, like, so for me personally, if it's 12%, if it's already at 12%, I'm likely not going to be trading, because I'm thinking to myself, how much more can it go? Now, 7 is a little more reasonable. I think this was higher earlier. I think everything has come down a little bit here, but this is my pre-market scanner. I'm looking for gaps, right? So the one, just since I'm on here, I'm going to point this out. The ones that I'm looking at are JWN. Okay, so keep in mind there are stocks who are going to trade with other stocks, right? So if we go, let me pull this out of the way for 1 second here, right? So Nordstrom here, right? So Nordstrom, we had a bullish candle yesterday, gapping down, right? So now, Chuck, there's a great example of a bearish gap and go. Okay, so price action, right? So if we just draw a line here at the low of yesterday, price action is now below that, right? And also, right, volume was okay, nothing crazy, didn't jump out, jump off the chart, but see this long lower wick, that long lower wick there represents buyers, right? So anyone buying yesterday is going to be trapped because we have price gapping down below yesterday's price action. So all these people who bought yesterday are now trapped. So when you look, you got to go through the the news here and find out, well, why is it gapping down? But the one thing that there are going to be stocks that are going to trade along with something that is, this could drive a sector, right? So the sector here, we're looking at Nordstrom, we're looking at Kohl's, we're looking at Macy's, we're looking at, the retail sector in general can get dragged down by a single ticker. And they're just sympathy plays. One stock might trade with another stock just purely out of sympathy, not because there's, any news or a catalyst that makes it trade lower. But, Nordstrom, JWN is the one that's kind of driving those retail stocks to drop. But you can see here, here's Kohl's, it's down. Now, 5% down, 5%, that's a more reasonable level for me, right? So I'm looking at anything from like 3 to 7% is ideally what I'm looking for. Once I start, getting over 10%, 12%, I'm a little less likely to want to trade it just because it's like, okay, well, where's it going to go? How much farther can it go up or down? But so you see Netflix here is hovering right around 7. What's interesting, so I mentioned the retail stocks, but pull this out of the way. But what's interesting here is now you go into Wayfair, right? Wayfair retail, but Wayfair here is a bullish gap and go, right? So I'm giving you guys part of this list that I've been putting together so far this morning in terms of gaps, the gaps I'm going to be keeping an eye on. So Wayfair, you have a bullish gap and go. You can see here, red candle yesterday, price action is gapping up. Everyone who was selling here yesterday is trapped, right? So what's interesting about Wayfair is you have to look at what is the catalyst. The catalyst here on Wayfair is that it is laying off workers, right? And you go, well, but it's laying off workers. That means things are not good. Yeah, but they're cutting costs. And investors like that. When things are not, when the company is not and revenues are not what they should be, cutting costs is going to help ultimately, right? So the market seems to like this, right? So they're going to be laying off workers. Not great for those workers, but it is going to be helping the company in terms of lowering their costs. So the market is responding positively to that. You have a bearish candle gapping up. There's another gap and go for you. Haven't even gotten into the 10 EMA strategy tickers, but we will. But this is a good opportunity to just go through some of these things. So Chuck, is my table proprietary? No, it is not proprietary. This is a pre-market scanner, Chuck, that I have through Interactive Brokers. Okay, so I use charting. I use Thinkorswim for my charting, and then for placing orders, I use Interactive Brokers. And this is the pre-market scanner that from Interactive Brokers. And you can see here if I click Edit Scanner. So I have here's what I'm looking for. This is my universe. So I have stocks, the US. Here's the markets that I'm looking at. I don't look at pink sheets. I don't look at over the counter. I'm looking at corporate. I'm really not interested in ADRs, ETFs, all that in terms of gaps, right? So this is just looking for just stocks that are gapping. And then if I then look at, here's my field, right? Here's my criteria that I'm looking at. So I'm looking for anything that is between $10 and $400. The change is no more than 12% in either direction. Gap down 12, gap up 12. I'm looking for pre-market volume of at least 10,000 shares. And then average daily volume, 500,000, right? So that's all the criteria that I am using in terms of the stocks I'm looking for. Okay, so that's the criteria. Now, I do want to show you. So we were talking about gap up and gap downs. The market's going to open in a minute, but I want to touch on this right real quick. There was this one that's gapping down, and I just want to point this out because it's a great learning point here for anybody who's new to trading. Okay, market just open. We'll jump into everything else here in a second. But look at this. First of all, I don't even know what who this company is. I don't trade it. I don't know it. Kayla, it's a pharmaceutical. But the point I want to make here is this is the type of chart you want to avoid at all costs. Okay. This is thank you, Win. YouTube. I'm going to have to sign off. I'll come back to this. YouTube. Thank you, everyone on that has been with us live on YouTube. Got to sign off now, but feel free to come over to reallifetrading.com, join us, trade with us, and great community here, and we would love to have you join us.